Good evening, everyone. This is Bill Noble with Token Metrics TV, and this is your market update. A lot of red ink on the screen. Inflation print came out today. Let's break down what's happening. Bitcoin is trying to break out. If you look at Bitcoin dominance, around 44%, that's going to be a key level. I think if Bitcoin is able to break through that level, Bitcoin can go much higher. If 44% sort of stalls Bitcoin, then maybe the whole market just stalls. But this is really starting to look like Bitcoin has got a lot more sponsorship than the rest of the market. Now, looking at Bitcoin on, say, a short-term chart, it's very interesting to note that, Bitcoin was able to get back above all of the price action below 36K. Now, that's good on one hand, but it's got to hold, right? We've seen this repeated pattern of these failed rallies, and everyone keeps asking me, is it a bear market? Well, as one of my friends on Twitter says, there's no bull market and there's no bear market. There's only what's on the chart, right? So if 36K can hold its support, Bitcoin is okay, and Bitcoin may be able to lead on the upside. Bitcoin is below 36K, then the market has most likely got additional problems. Now, let's take a look at something that was doing well and then got completely hammered. And that's Ethereum versus Bitcoin. Ethereum versus Bitcoin has done nothing but go up since late May. And then all of a sudden, Bitcoin outperformed so massively and ETH actually went down in the process that, ETH versus Bitcoin has retraced almost half of its gains, depending on how you draw it. Now, I can see 1 or 2 more days or a week of continued weakness in ETH, but I don't think you want to see anything more than that, right? In other words, when we go to the next chart, let's talk about inflation and something that I learned in Legacy, a term called sponsorship. So inflation is real, right? We've talked about this, but data points are starting to come out. The consumer price index came out today, and that's crap. That doesn't reflect the reality of what Americans are facing. What Americans are facing is what Sherwin-Williams did, a paint company, just levied a 7% unilateral price increase effective July 1st, and there's nothing transitory or temporary about it. In other words, there's all this BS in the market that current price hikes are transitory or temporary. That's bullshit, okay? I think if anything, there's a good chance that a black swan next year is that inflation in the United States winds up double digits or possibly above 10%. Now, let's go to sponsorship, right? So inflation's out, equities are up, Bitcoin's doing okay, all right. The European Central Bank comes out and says they're going to print more money faster, okay? BTC is propped up by Sailor and altcoins are getting hammered. Now, it's sometimes not best to make too much of what happens in one day. And obviously, as I reflect back, I had company in this idea that inflation would lead people to search for higher yield in DeFi, right? So altcoins are getting hammered because they're not backed by the Fed. They're not backed by Michael Saylor. Everyone owns them, and the marginal seller doesn't meet much of a marginal buyer, right? So people come in, they puke them out, and there's really no buyer there. Now, does that mean I think you should give up on altcoins on a big red day? Honestly, no. But I think we have to start asking ourselves, particularly if Bitcoin dominance goes through 44, if there's a possibility that crypto becomes a one-coin market, right? Everyone is like, is it a bull market? Is it a bear market? People out there are getting pissed. You may be pissed. The fact of the matter is we can only read the charts as they are. So if alts continue to bleed out, it's because they've just got no sponsorship and they are the speculative asset that takes it on the chin in an inflationary environment because everything else is backed by a central bank. So we may be looking at the downside of free markets. Now, again, I don't want to get all down in the mouth just because it's a red day. Frequently on red days, that can be big buying opportunities, particularly if, as I record this market accelerates lower and it's kind of a shit show into the end of the day. So in sum, yes, the market's in a consolidation phase, and consolidation phases are frustrating. My final word is you can't get frustrated. You have to manage your positions. You have to say to yourself, do I take the tax loss on this and come back in 30 days? How do you manage your risk? This is Bill Noble with Token Metrics TV. We'll see you next time.